Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Remember, we are inching closer to the big bank tariff announcements tonight. 1:30 a.m. is when we finally get to know what is going to be the big US announcement when it comes to tariffs and how will the Indian markets then react tomorrow to all those announcements. Let's look at how the markets are trading. After yesterday's aftermath, we are actually seeing the markets find their foot above the ground. You can actually see 23,300 back on the screens. Despite slight choppiness and a range-bound trade, you can actually see slow and gradual, but at the day's high kind of a move on the markets. On the Nifty, there's a 150 point of a jump, 0.6% higher. It's led by a whole host of sectors supporting it. It's a broad-based move on the higher side. All the sectors are in the positive, with the real estate index, which is kind of recovered most of its losses of yesterday. It's up by 3.5%. Consumer durables up 2.5%. You have the broader markets that are shining even brighter than the frontline indices. So the mid and the small caps are up nearly 1.5% as well. You can see the FMCG stocks over 1% up. So at least 5 to 6 indices that are up over 1%. Two of them above 2% each, and one of them above 3.5% as well. India VIX is down by 0.9%. All the sectors are in the positive zone at this point in time. On the F&O side as well, there are so many stocks that are actually rallying in trade. Kalyan Jewelers, Tata Consumer Products, Zomato is at 212. Smart moves that can be seen across the board. And when we look at the Nifty 500 basket as well, you'll find so many names that are up and about. DB Realty 10% higher. Kalyan Jewelers we marked out. KPR Mills, Tata Consumer Products. You also have names like Valiant. You also have names like many of them, V-Mart Retail, V2 Retail, Vishal Mega Mart, all of them that are rallying in trade as well. Let's welcome our guest on board to help us understand what do we make of this move and will this actually sustain. Mr. Sharad Avasti joins in, the head of research at Smiths. Warm welcome to you, sir, and thank you so much for taking the time out. You join us at a time when we are going to be heading into the big tariff announcement, something that the markets have been edgy about for the last 1 to 2 months odd. This date was known and finally we are actually sitting on the D-Day. Tonight when the announcements come in, the world will be on the edge, not just the Indian equities but global markets will also be looking at each and every word that comes out from the press conference tonight. What is it that you are expecting as an investor of the Indian markets from what will be announced today, and does it really have a big bearing on how the trajectory will be shaped up?
Yeah, thank you for having me on the show, Sakshi. Yeah, I think it will be a bit of a challenge as to what comes out, but I think largely it will be not be very. It should not be very negative for India. Even the tone prior to these discussions have been showing that maybe India will rationalize some of the tariffs, and there is a high probability that US also obliges by not being too harsh. The focus could largely be on the larger partners, Canada, Mexico, China could be the major brand bearers of this whole thing. Maybe some bit of impact on Japan, Korea, and some impact on Germany, directly, indirectly because of the auto tariffs, etc. But I think directly now from the earlier tone that we were listening on tariffs, it's come down substantially. And I think today when the final announcements are to be made, I think it should be a softer landing for countries like India, etc., or some other countries which have good relations with the US. And as such, we don't have such a large bill difference that would create a material impact to the trade deficit number also. So I think the larger focus will be on countries like Canada, Mexico, China, Japan. Not so much of an impact on India. Individually, yeah, I think some sectors might get impacted, but I don't think it will be a very material dampener. I think the market is too nervous about this thing, and there's been some correction because of that. So I believe markets are already apprehensive. Ideally, if what I'm expecting that transpires, we could see some kind of relief rally for Indian markets.
Okay. So, in case one has to gauge, the sectors that are probably vulnerable in India that might come under the radar, what could those sectors be, sir, and what would your approach be there? We've been hearing about talks on auto space, on pharma space, metals, agri. How are you navigating through these specific sectors? Somebody who has a long-term vision in their portfolio and has an exposure to these kind of sectors, what are the risk factors for an knee-jerk reaction, sir?
Metals, yeah, certainly they could see some reaction because they have recovered a bit from the lows recently. Autos, I think Tata Motors is bearing the sole brunt of the major issue that they will have. There were some expectations of some impact, on some Vardhan Motherson, but the company came out clearly saying that maybe it will not be as material as the market is thinking it to be. So I think largely where I think most of the impact would be absorbed could be, the brewery stocks. I think the valuations there are not very comfortable also, usually on the higher side. But I think in the current run up also because of the improvement that we are seeing at the domestic level, I think that is one area, breweries, distilleries, so beverages. I think that is one area that could be hit hard. Pharma, some pockets could be hit, but I don't think it's an across the board hit that you would look at. And since most of them have corrected a bit over the last 3 to 4 months, I don't think there's scope for much correction there. So on balance, I think maybe autos and breweries, but autos largely, I think Tata Motors taken the hit, whatever that could come from there. The JLR part of the business could get impacted because for UK, etc., I think US is a big trade partner in terms of car exports. So that is an area where there could be some impact. And the brewery sector, I think that could have some impact. Metals might have some impact because the valuations are fair and square. So, once selling comes in, it could deepen a bit. But other than that, I don't think agri, etc., there would be any material impact on these stocks.
Okay, fair point. But if one has to, kind of hedge their positions as well, if somebody is a position trader or an investor in the near term, like 6 months to 8 months views, do you think it is better probably to look at domestic focused sectors rather than export oriented ones to keep one safer from these external shocks? Probably today might just the beginning of what could be a series of announcements that could be made on tariffs, sir.
Yeah, that is quite possible. So it's better to focus on the domestic side. But if you're buying a larger entity, I think you can't expect it to be, totally insulated against the external shocks of global problems. Suppose protectionism does start in one of the biggest economies in US and you have counterparty, again, tariffs coming from other countries also, which we have seen a tit for tat kind of approach. So I think if that starts happening, protectionism is not good for international trade. Everyone will be impacted in one way or the other. Like if tariffs go up in China, there is a possibility that the supply get diverted somewhere else. So India could be at the brunt of it. So I think there are many issues in this supply chain thing, that how these tariffs will play out and how the final supply chain issues settle down. So it will be very difficult for you to be insulated against these changes if they are very broad based and across regions. So I think it will be very difficult to find, just domestic names which are just favoring domestic sales, like the Russia-Ukraine tension. If you consider it, it was a small piece,
Hmm.
but it
Hmm.
impacted everything across the board. So I don't think it will be as simple, to identify just domestic-driven stories. Directly, indirectly, everyone will be impacted. Maybe the direct impact in terms of stock prices is a bit lesser because you can't associate it directly to the event.
So, Mr. Festive, I have to ask you, like, even if we expect the worst, a tit for tat tariffs across the world, there is kind of a situation of a global tariff war that emerges. What are the risks that one should be aware of on the markets? I mean, we've already seen 5 months of a pain, we've tested lower levels, we've recovered a bit as well. But do you think we can also test the recent lows that we saw in the markets, 21,800, and could we go even beyond lower with this factor emerging?
See, if it's a full-blooded thing where everyone starts getting protective and protectionism gains foothold globally, I think that's a
Hmm.
problem. But in the past, also, even what around 1930 something, these US did try some protectionism, etc., in terms of tariffs, etc. I think it's easier said than done. And to implement it, while you can do lip service and talk about it a lot, but to implement it on the ground is a very difficult job. Like even in case of auto tariffs, what they're talking about is that how much component is being manufactured locally and how much is being imported. These are things that are easier said than done. To implement it at a national level and to comply with international things, it's not that easy. So I think a lot of lip service will be there, a lot of social media brickbat throwing here and there, that will continue. But to implement these changes on a wide scale will not be easy. And as I told you earlier, also global trade has a way of finding ways out of these problems. So maybe 3 to 6 month kind of timeline, where maybe you see a bit of an economic slowdown or trades rerouted through different locations to avoid these tariffs. But beyond that, I don't expect much of an impact from these tariffs.
Okay, fair point. I also wanted to get a sense on the commodities aspect as well. What we are seeing happening with gold. I mean, it's hinching higher despite a 32% rally we've already seen unfold in FY25. The uncertainty around tariffs and what that could do to global economies at large, to inflation as well, is again, providing that, more edge, over and above what we've already seen to gold prices even now. There is no sign of slowing down or a correction or any kind of pullback from the prices that we are already seeing. What is your approach here, sir, and what are you advising clients here?
See, I usually use gold just as a hedge when I'm not sure about the markets. I think
Yeah.
for anyone who's an equity participant, that's the best use of gold. And anytime when we think that valuations are decent and we have decent upside on the equity market, it makes very little sense to be in gold. And two things particularly helped gold over the last 3 4 years. One is particularly over the last 1.5 2 years. I think it is partly the U.S. dollar appreciation and depreciation in most emerging currencies, which was a function of rates and inflation rates globally, internationally, particularly US. So I think now that trend is reversing. Even today, I believe most probably G6 are favoring you. Globally, also we think that long-term rates are coming down. Inflation should come down, so that should aid lower gold rates and lower dollar rates as well. So I'm not very bullish in gold at this point in time, but yeah, maybe at some point in future when there's turmoil internationally or financial instability or any kind of big geopolitical tension, which have been partly the reason why gold has been so strong. But I think once clarity emerges after this tariff turbulence, etc., I think there is high probability that gold settles here or maybe moves lower, and probably you have a better opportunity in equity markets. So I think it's not a good time to be in gold.
Okay. Also wanted to get a sense when it comes to key sectors. I wanted to start off with IT names first. What's your approach here? Especially one, it has been the more volatile sector of all over the last 10 days or so, during this approach to April 2nd kind of announcements, and of course now we are heading into the earnings season as well. 10th onwards we'll start getting TCS numbers too. Earlier we were imagining that the change of regime under Mr. Donald Trump could actually be great for IT companies, because there is going to be a lot of loosening of purse strings when it comes to businesses, and lowering of the taxes there, and all of that could somehow spell good news for export oriented sectors of ours like IT. But now scenario seems to be a tad more different with this newer thought process emerging, tariff talk and protectionism emerging as well. What is your approach on the IT space now, sir, and what does it mean for the upcoming earnings? Will it be another tad lower quarter?
In fact, this should be a somber quarter. Might not look very promising because of the turmoil in US. I think some part of the ground feelers that these companies would present on the quarterly con calls might be, of uncertainty, etc. So you might listen about a very uncertain future from most of these companies. But at the same time, I think Trump has been also very vocal about lower interest rates. Lower interest rates would mean, better growth for BFSIs in the US particularly. And largely, most IT companies are big service providers to these BFSI space in US. The second challenge recently has been that Citibank came in and said that maybe they are employing their own people on a higher cliff, and not really outsourcing so much of the job. But I think what is outsourced to Indian companies would continue to be there, and in case lower interests are there in the US, that should certainly bolster the domestic economy also. Though marginal growth rates, but still growth rates for the US economy. So I don't think it's a very big challenge. There is nervousness right now, and usually I'm a fan of buying when there is nervousness. And for a change, we are getting IT companies at good valuations. The frontline names, Infosys, TCS, they seem like decent value. Wipro has also corrected a lot. So I think these are good names to have at these valuations if you're happy with, anywhere between a 15 to 20% kind of return over the next 1.5 year. Among the smaller names, I think Tech Mahindra has on its side the probability that, the BFSI space or vertical really claws into a different orbit. It should substantially aid their growth and bolster them to a different size. Similarly, LTIM with the merger benefits and synergies coming into place, I think they could mine much bigger clients, much bigger order values. So I think these are 4 5 names I'm looking at. Even an emphasis Mashtech on the much smaller names could do very well. Birla Corp is looking decent at these valuations. So I think they look decent at these valuations across the board, and I'm not very nervous about what IT will do. Maybe a quarter or two of delay, that's very much possible. But I think the market is overpricing the risks.
Okay, market is overpricing the risk at this point in time. So that's a good optimistic thought as far as the IT sector and the long-term outlook on the sector is concerned. Let's talk about a few more, domestic-oriented names then and sectors. Defense is something that I wanted to discuss. We have seen, some recovery rally take shape across the board. Stocks like HAL are coming back into focus after having signed the biggest ever contracts. We are seeing shipbuilders come back into focus yet again. For those who missed the earlier rally or who caught in the FOMO, entered into these stocks at much higher levels than they were supposed to be at. After the recent correction, do you think now is the time to yet again look at defense?
Yeah, I think be specific, like HAL with this recent order win certainly looks much better than the rest of the
Okay.
pack. I think the forward numbers. Now, the other part that we could be looking at is that how much of execution happens on the ground, because the order books were already swelling, and we all knew that the orders books would swell to around 2 3 times of the current size over the next 1.5 2 year. And partly with the HAL order, you can very easily understand that across the board this is going to happen. So I think defense across the board, leave apart the shipbuilders, they have a different ball game in place because of again some Trump turbulence, because of the changes in shipping laws, etc., and duties on Chinese ships, etc. So I don't know how it plays out, but generally what it looks like that is it is going to be a very promising area or time for most shipbuilding companies. So they might be in a sweet spot for some time. But again, both these places, I think what you need to look out is execution. Uh, I think ideally from these valuations, you would want to extend your horizon to around, 24, from around 24, 18 to 24 months to around 36 months and beyond. I think that is where most of the profits should accumulate for these companies. Once execution starts showing up over the next 18 to 24 months,
True.
I think there could be a sharp run up in these stocks, and the numbers could be re-rated higher. HAL has already had a big order win, so I think that would be my preferred choice. Bharat Dynamics could also be good. Uh, I think BEML is a diversified base, usually traded at high valuation, so that could be supportive as well at these valuations. And the shipbuilders, I think they could be in for a sweet spot. So the likes of Mazagon, Cochin, and GRSC, they could be in a sweeter spot vis-a-vis the defense stocks on the shorter time of it. But I think for defense, it would largely be the big order wins that would make a material difference. Like for HAL, big order win has already happened. And if other companies can also do such big order wins, which are, one third, one fourth of their total order book, that could result in substantial re-rating of these companies.
Okay, got that. So that's as far as defense sector is concerned. The next one I want to bring up for you again from the domestic themes is the consumption theme, sir. Remember, we were talking so much from 1st of February up until now that how we are awaiting 1st of April and when budget news, budget measures will start to kick in. from now onwards, there'll be lesser tax that will be deducted from people having income, lower incomes as well. And those who have 12 lakhs, 12 and a half lakhs of income will have no tax to pay. So additional money in the hands. Where will that money go? And do you think there are some sectors that you are penciling in on?
Yeah, I think consumer durables should easily be one sector. Two-wheelers could be another sector you could look at. So within consumer durables, something like an Crompton Greaves looks like an attractive bet. They are expanding the TAM, getting into newer products, newer regions, which are substantially bigger than the current market that they are serving. So I think that could be an interesting story in the long term, and with this Philip, maybe even in the short term. Similarly, in Orient Electric could do very well. On the cooling side, I think with summers being a bit harsh this time, maybe a Symphony would do well. So I think these consumer durables would do well. On the two-wheeler side, I think not across the board, but I think at these valuations, Bajaj Auto and Hero MotoCorp would be my top bet.
Hmm.
But Bajaj Auto also looks like decent at these valuations, for targets for some upside of around 20-25% maybe from current levels.
Okay. We've discussed a few themes. I've also wanted to discuss about the FII flows, sir. FIIs have already yanked out 10,000 crores from the Indian stocks before this Trump's tariff bomb really detonates. Are we prepared now as to seeing what could be coming in next? There was just a few signs of buying, but it also fizzled out pretty soon. What do you expect as far as the foreign investors' approach to the Indian equities will be post the tariff announcement, sir?
I think depending on how harsh the tariffs are, but there is a high probability, that everyone makes a return to Indian equity markets. As we have been seeing, the buy China, sell India kind of story has already ended.
Hmm.
Similarly, I think the currency depreciation angle is also now not favoring selling. So I think you should get some buying. Top it up with lower interest rates and lower inflation trajectory, I think, and the dollar weakening. There is a high probability that most emerging markets should see inflows. And India obviously should feature among the top bets. So most of the FIIs, if you listen to their interviews, everyone remains very gung ho about India. Maybe 6 months ago or 7 months ago, the valuation was something that was in a stark contrast to what you're getting in China. So short-term valuation arbitrage play. But now I don't think that even exists. And so India remains a bright spot. I think with these 4 5 factors: lower interest rates, lower inflation, dollar weakening, rupee appreciating, and at the domestic level, more or less stability and clarity after the Trump tariffs. I think there is high probability that you would see FIIs returning to table.
Hmm. Okay, got that. Towards the end, I'll ask you on the overall expectation from the upcoming earnings season as well, sir. Where do you think tide is turning for corporates in India, and where do you think there could be some more quarters, one or two more quarters before we finally see green shoots emerge?
I think this quarter also we should see green shoots emerge across the board.
Okay.
Numbers on the high frequency numbers are already, good only. I don't think there's much problem whether
Hmm.
it's power consumption. I think urban and rural consumption picking up should be one big trigger for most markets.
Hmm.
PM numbers most probably released today are again very much in line. Inflation is already lower. So I think this quarter also you would see some improvement. And next quarter onwards, you would see full-fledged improvements. But Q1 generally is not a very stupendous quarter. So maybe consumption continues in Q1 as well. But Q2 onwards, I think full flow we'll see across the board improvement in most things. But Q1 also might be pointing to a very bright future. So
Hmm.
banking is something I think would do well. Most even with the NBFC, clutches coming out, there is a high probability that liquidity infusion would help across consumption. Consumption across the board should see some improvement over the next 1 or 2 quarters. IT, as we were talking, that might take a bit of time, but yeah, maybe at max a quarter. But post that, I think there will be much more clarity regarding the US. So IT probably is the only one that might take a quarter or so to get more clarity. But rest of the pack, I think, yeah, banks should certainly lead, and most consumption-driven stories should also do very well over the next 1 or 2 quarters.
Okay, got that. Everybody is just kind of wondering what should be the next 48-hour strategy in the markets because we do not know what finally will come in from the US. Do you think, one has to be just keeping a wait and watch mode and not get into either panic or a FOMO at this point in time? What exactly would you advise, first time retail investors who've already been facing so much of uncertainty over the last 5 months? What should they be prepared for over the next 48 hours, sir?
I think one thing you should be prepared for is abnormal volatility. There would be a lot of analysis, half-baked analysis on a lot of things. People trying to make a quick buck out of the announcements, etc. Be clear with your long-term goals, and I think if you are investing for the long term, these tariff things and regulatory things keep coming and going. But unless and until something is, very destructive on a very sustained basis, you should not panic as an investor. So I think the valuations right now are not as such that you should be very panicky. Maybe 4 5 months ago, among the small cap, mid caps, you were in that kind of scenario. But today, I don't think that's the scenario. So in the worst case that it creates a panic on the downside, I think the best strategy would be to stay put and not sell in the panic.
Okay, fair point. Well, thank you so much, Mr. Vasi, for being with us on this special edition. We will definitely hope to see you very soon, maybe tomorrow, right after the announcements are made, so that we can gauge as to what your expectations are and how things have shaped up to get more insights as well. So, thank you so much. Fingers crossed, and we'll see you very soon, right after the tariff announcement on Business Today. All right, viewers, we'll start wrapping up the trade now. 4 minutes to go before the markets shut shop. 172 points higher, 23,337 days high, and the markets have been holding up despite the fears of tariffs looming large. And all the sectors, in fact, are up and about. What we saw yesterday was a sharp nervousness, reaction on the downside, global nervousness coupling in. But overnight, we saw US markets, on a mixed note. We saw Asian markets on a mixed note today, and India largely pulling up towards the end of the session as well. Of course, things will have to be seen how they shape up tonight, and finally, the markets will react to what has been announced tomorrow. Real estate sector zooming ahead, 3.5% higher. Top moving sector recovered, I think, almost all of its losses of yesterday. 854 levels. Now, when we look at consumer durables index, 2.5% higher, especially led by that retail space. All those business updates that have come in from Q4, bazaar style retail, Vishal Mega Mart, V2 retail, all of these are actually buzzing. Store expansions, wedding related news, sales uptake on a year-on-year basis, all of that lifting the sentiments there. Even consumer durables, for that matter, are doing well. You have the broader markets that are ticking well. So within the mid caps that are actually up by 1.6% in trade today. The top moving names, if you look at on the mid caps, are Kalyan Jewelers, 11.5% higher, Godrej Properties, 5.5% up, Bharat Dynamics, 5.3% higher in trade as well. You also have PB Fintech, that's 4.5% up, Dixon Tech, 4% up. We talked about Vishal Mega Mart, Prestige Estates, BSE, Aditya Birla Capital, Polycab, SRF, KPIT Technologies, Jubilant, all of them upwards of 3% moves that can be seen on this one. Let's look at the small caps as well. Within the small cap names, you have counters such as Shyam Metallics, PNB Housing Finance, Keynes Tech. So both Keynes and Dixon EMS plays are back. Himadri Specialty Chemicals, Dr. Lalpath Labs, IIFL Finance. So again, the capital markets related story also moving up. MCX is up in trade as well. So BSE, MCX, IIFL Finance, we've already seen a few. CAMS is also up and about in trade. So the capital market story is doing well. Then you have even the FMCG names that are pulling up in trade today. A percent higher for FMCG after a long haul, largely led by Tata Consumer Products. That's a top mover, near 7% up. Britannia is up 3%. Imami, United Spirits, Godrej Consumer Products, Redico Khaitan also at 2,365. That's the kind of move that you are seeing there. Then pharma index about a percent higher in trade. Let's look at the pharma names. That's also buzzing smartly. Lupin, Oro Pharma, Zydus Life, Alchem Laboratories, Laurus Labs, all of these diagnostic chains also up and about in trade too. So all the sectors, even in the IT pack, you can see names which are bright and up in trade today. Oracle Financial Services, Tech Mahindra, Persistent, Infosys, LTI Mindtree. Some of these names were also taken by Sharad. He talked about where is he positive there. Broadest index, again you have Zuari Agro Industries, that's up 8.5%. You have names like V-Mart we've discussed, Kalyan Jewelers we've discussed, that's up and about. You also have Vinati, Valiant Organics is something that's up in trade. Gujarat Alkalis and Chemicals about 17-18% higher. Hester Biosciences 20% circuit on this one as well. So that's the kind of move that you've seen across the board. 330, you have 23,330 on the Nifty, 165 points higher in trade. Let's look at the top movers on the Nifty today. After this kind of a move, the top 5 movers in trade today are names like Tata Consumer Products, Zomato 211, Titan 3105. So that gems and jewelry names consumption basket is also up. IndusInd Bank, Tech Mahindra, Maruti are other movers on the positive side. On the lower end, BEL, Nestle, Ultratech Cement, Bajaj Finance, Power Grid and Bajaj Finserv were the top drags in trade today. But there we go. We have ended the day on a smart move, 23,332, 166 points higher. And this is right ahead of the Trump tariff announcements. Tonight is when we finally see what will be announced and whether India will have any signs of friendliness or dovishness to really see when it comes to the tariff talk. And in case that happens, the markets could actually cheer and move further from here. But in case there is something that comes as untoward, there could be again testing of 23,300 levels that we could see tomorrow. So we'll keep an eye out on how the markets trade. We'll keep you posted with all the developments post the market hours today. You will also find the live coverage across our platforms at 1:30 a.m. in case you're interested to be up and about and really see live as to what's happening in the White House and what gets announced from there. So stay tuned for all of those announcements, and we'll be back with more coverage on the world in the world of business and economics right after this one too.